Ira Epstein of Linn Associates with your financial market wrap-up for a pretty crazy day on this Tuesday. And we're sitting here on March 12, 2019, about 3:56 p.m. Central Standard Time. Before I get too far, we have a webinar on Thursday. The invites went out. I've done my first special report, video report. You know, I'm tired of writing. I think I can do so much more with video reports. And in this one, I did one on gasoline. So if you're a gasoline person, you were sent an email if you're on my list. If you're not on my list, just go to our website and you will see under Education Research, go to the video section, you'll see Special Report. That's where it's going to be. I'm going to do more and more of those. They're going to only be up a short period of time on the website. They're not meant to be and stay there like a written report. They're very different, very, very timely. Now, let's talk about where we're at. Well, Miss May lost her Brexit vote today. That's not a surprise. The pound ended up down on the day, about 80 points. You can see the range was rather broad, about 200 points today. The marketplace in the metals, once that vote started taking place, gold was not only alive, it kept staying alive. It never really broke during the day, nor did silver. They were strong all day long. We saw Mr. Lighthizer speak today in front of the Senate Finance Committee. He said they're weeks away, he thinks, from a deal, but you don't know. You know, the hardest part of any deal is the end of it. I think you realize that. And it's all in the wording and what happens, and there's the saving of face. I do not look for Premier Xi and President Trump to meet until this deal is basically done. I do not think that Premier Xi will put himself in the position, as we saw Kim Jong-un as the president walked out on him. In all fairness, China's no Korea. But why put yourself in that position? There's a saving face here, and I understand that. When we come to the stock indices, you're back into this resistance zone that you've been at. You've been fighting this battle for a while. Can it break through? Don't know. You probably need a trade deal or something to help it. By the way, if you look at interest rates, they're really slipping. Today was a big drop as traders were buying a lot of treasuries, especially after the Brexit vote failed, because now you either get no Brexit or they're going to ask for an extension. As you look here on the daily chart, you're climbed back into that resistance we've been talking about. As you look at the market, you've got a higher high, lower low pattern, which is very difficult. The market was able yesterday to climb through the 200-day and the 18-day average of closes, and today it added slightly to that. Didn't get through the old high. The bias is up. Bollinger Band's right above you at 28.15. What is a Bollinger Band? It's a number that represents an algorithm, and that algorithm gives you a resistance and a support point. What I think's going on is the market's trying to narrow in these bands and trade within it like a spring, tightening up again for whatever that next move is. When I look at momentum, it had been down, pointing down. It lost that yesterday, and it's adding to a bit of an up flavor, though. I'm going to look for rather stiff resistance if you do rally at the 28.15, let's call it 50 area. The NASDAQ right back to the old high here of taking a look at 72.1150. If you look back here, you've been up to the Bollinger Band, you failed a couple of times, and where are you right now? You're back up to that Bollinger Band. So I, for one, will not be surprised if the market tries to give up a little bit of ground here, but look at the consolidation of the sideways action. Does the market have a trend? No, it's been caught in this sideways action now, actually all of February into this part of March, but the bias is up and momentum is overbought. Whoa. In the Dow, you've got a downtrend. Now, we know it's being pulled by Boeing, all right? It doesn't take a genius to understand that out of these 30 stocks here, look what's going on. Lower high, lower low, Boeing weighing on that market in a big major manner. When you go to the other indices, though, and the Russell, doesn't look that different than the Boeing to me. Still got the downtrend, lower highs, lower lows with resistance. 1565 all the way up to these other 200-day and the 18-day average. So even with Boeing weighing that down, the Russell, the small caps, are still not looking all that good. In the VIX, as I said before, I thought that the pros were going to sell calls against the upper Bollinger Band, and I thought they'd come out against the 18-day average. If you drop down, I think they'll sell puts here. And I think the market's narrowing in that volatility. You're also oversold, not in a trend, lower low, higher high. In the T-bond market, whoa. I mean, weren't we just talking going over 3.25% months ago, 6 months ago? Here's a market, it's probably around 2.6. I didn't look at the cash before I came in, but it's got to be in that neighborhood. Higher lows, higher highs, overbought into a resistance zone of the Bollinger Band. We had just a week and a half ago tried to push out the bottom of this. This was that pattern of sideways we were talking. The market came down. Then it got thrown back. Now, this is going to be the key part. It either tries to down again, or if not, you put into play the 18-day average of closes, which is just what happened. This was on Thursday. Now the question is this market going to make a run for those highs? It gets up on Friday for it, pulls back. Remember that friend of mine, the 18-day average? And I so often tell you, that is the line in the sand. The market fought at that number today and trying to come back up. So I still contend that you've got to pay attention to that, but I'm also paying strong attention to this sideways action. As for the Fed, they don't have to ease. Market's doing it for them. When we come to the 10-year notes, you're back up to the Bollinger top and at the top of this resistance band in an overbought area. With the outside days up, what you don't want to see taken out in the bonds or the notes is today's lows by Wednesday or Thursday. TLT, higher lows, higher highs. Overbought, but not against the resistance of the Bollinger Bands the way we're seeing in the futures. In the dollar index, you peaked out at the top Bollinger Band, hit it, what, 2 days in a row, and now you're in the back-off period in an overbought market. Even if you take out 96.70 and a half, you've got support, theoretical at least, at that line in the sand, that 18-day average of closes. In the eurocurrency, a nice bounce to the upside after trying to push out the lower part of the Bollinger Band failed. But I don't know what to do with this market. I've got higher highs. I've got lower lows. Very difficult. In the British pound, people were hoping, praying that something positive was going to happen in Brexit. They didn't get it. They drove the market rather sharply higher today to a 132.96 and then closed it on its butt. I haven't got the final settlement at this hour, but it's probably going to be right around here, 130.85. So you got a lower low, higher high, another vote tomorrow, and possibly a third vote on Thursday. If tomorrow's vote passes, that's leaving without a deal from the EU, not accepting it, just moving on. That's not a big probability, but it's certainly a probability. Then, if that fails, asking for an extension, and even if they vote for that, don't know what the EU is going to demand for that. In the Japanese yen, you came in, bottomed out against the lower Bollinger Band, picked up momentum, but ran into the brick wall of the combination of the 18 and the 100-day average of closes, and you're sort of in no man's land here. I don't know if traders think they should be running to this market as a safe haven because of Brexit, or they say, it's already baked in and let it slip down. They're having a hard time with it. In Bitcoin, we seem to be fighting a battle at the 18-day average of closes. We keep getting back there and just going sideways. We are not trending. You have a lower low right here and a higher high, and you're starting to develop sideways action. But for the bulls in the market, you know, they're going to say that the market's probably put in the worst case scenario lows unless some piece of bad news comes at them. Then we get to the energies. Now, before I get too far, I did my first energy report as a video. Never done one before. It is now going to be on our website tonight. If you go on our website under the area of energy, I'm sorry, not energy, but research or education, my brain's quicker than my mouth, and drop down to the video area, you will see that it is there. And let us know what you think. I think you'll find it fascinating. But in any case, I like doing them better than writing. Got the lower lows, higher highs. You know, the thing here that's going for the market is Venezuela is in absolute turmoil. The U.S. has called back its delegate from there. I think today was the 6th day without power. They're not shipping out of the Jose port. They're losing more production. No water. Refrigerators aren't working. Electricity's on and off, but mostly off. Real problem. And that, of course, takes some oil off the market. you can see how the market has gone sideways into these Bollinger Bands. This is a real son of a gun. This is a lower low, higher high. Don't know what to do with that. Crude not giving you a trend either. In the WTI, lower low, higher high, hits resistance. Gasoline hit the upper Bollinger Band. This could be where something of a correction comes in. It still has the embedded reading, which means on the pullbacks, until that's lost, I think the pros are buyers. Even if it's lost, my thoughts go that I think the buyers want to come in against that 17700 area, as this market has a strong seasonal tendency to rally actually from the beginning of the year up until late April. So we'll see if that works out this year or not. In nat gas, the market's lost its winter demand. We're going to be 70 degrees in Chicago, or very close to it on Thursday. While it's fleeting here, we're changing. We've moved our clocks, we're forward, we're getting more sunlight every day. It's changing. And I know if you're in parts of the country right now, you're wondering what I'm talking about, but it's the way it is. You've got the higher high, lower low, no real trend at work. You know, one of the favorite things that we have is our guide to technical indicators. And if you're a techie like I am, maybe you need a refresher. And what this does is, with the help of the old Futures magazine, and they're no longer around, but I know I was a big part of putting a lot of this together with them, these two special reports. And the reason is, I think they're the best around. I mean, I read, as you can imagine as a technician, all these new quant things and what people think works. And what I realize is people can build anything to work in a short period of time. It's the longer period of time that's the problem. And I think if you go back to the basics and at least have an understanding, if you want to choose those ways to go, and there's nothing wrong with them, at least understand what you're getting into. Understand the beginning. To get these, and they're free, we'll send them by email to you, just give us a call. You can go to our website, sign up for it, or you can click here. Remember our Thursday webinar? The invites have gone out already. Look in your mailbox, your junk, wherever you've got a clutter, whatever it is, if you didn't see it. I'm Ira Epstein. Talk to you tomorrow.